Welcome back to the Rogue Trader podcast with me, Nick Leeson. Today we have Jason Sen, so we're talking markets yet again, a thing that interests most people. Markets have been a little bit quiet, but Jason, is there anything stand out that you're seeing over the last couple of weeks since we last spoke?
No. Well, in terms of markets, good answer. No. Well, it's typical summer markets. Volumes have clearly decreased. Volatility is decreasing. That's just something that traders must take into account. Don't force it. Be prepared to sit on your hands, and you might have to wait a couple of weeks before things return to normal.
Yeah, I think that's probably the best piece of advice, not forcing it. I was thinking that myself this morning as I was looking at the markets. Haven't done a great deal today. We've got some retail sales numbers coming up, not retail sales, but some of the retailers reporting later today. I think Home Depot, and then you've got Walmart and a couple of the other big box retailers during the week. So there will be some activity, but a lot of traders are away. As you said, you've not got that volatility, you've not got the volume, and markets are, they're staying fairly, the indices certainly are close to their all-time highs, if not at their all-time highs, and they're holding, which is a good sign, I suppose. Is that a good comment?
Yeah, I think you're right. There's been a lot of negativity around, and social media. When I look at social media, there's a lot of people questioning why the stock markets haven't sold off significantly. And I think the fact that they haven't, as you say, is a good thing. Maybe too many shorts out there, but there's nothing to indicate to me that the market's about to drop. Probably crash next week after I've said that, but there's nothing technical that's telling me that, and there's typical at times like this, we're seeing doji candles on a lot of the daily charts. Gold, stock markets. That's when the market goes up a little bit during the day, goes down a little bit during the day, and closes quite close to the open. And it just indicates there's a balance and a lack of conviction from bulls or bears. They're not trying to push the market or take control.
Yeah, I mean, I don't know which market you've got ready for us. Have you got Bitcoin there that we could maybe have a quick look at? I remember one day last week when Bitcoin went up to about 124,500, around that sort of level during the Asian trading time zone, really. And then during the course of the day, it was back down at about 119, probably hovered between 118 and 119 for quite a bit. So, set a new high, but then very, very quickly retraced from those levels. And even from that point onwards, we've probably gone between about 115 and 118. And, symptomatic, I suppose, of the markets that we've already discussed, in that traders are away, not a great deal of volatility, not a great deal of liquidity, and not doing a great deal. Or do you see a breakout in one direction or the other?
Well, look. We all know Bitcoin is in a massive bull trend, punctuated by periods of consolidation or maybe a small correction. That's the pattern. Someone contacted me the other day saying, looks like Bitcoin's about to, drop significantly. I don't see it myself. There's no pattern here to indicate. This is a bearish engulfing candle, quite a significant one. Can you see that? We reached a new all-time high at 12,400. Sorry, 124,480, I should say. Missing out a zero there on my number. And immediately collapsed, wiping out 2 days of gains. Okay, that's a pretty negative candle. Doesn't mean we're about to have a significant sell-off. It did indicate to me we'd get to about 15,000. We've done that. And I think that's probably the end of the move. I don't think we're going to go anywhere. I don't think we're going to go significantly further down. This little low is around 112,000. So I would be a little bit more nervous if we got below 112,000. But as I said, nothing to indicate any significant move is on the cards at the moment. The downside anyway.
Okay. What about gold, right? I mean, we've spoken about gold a number of times over the last weeks and months. It's been flying around. It's been hitting new highs. It's been selling off aggressively. It's from a trading perspective and a volatility perspective, it's been doing everything that you absolutely want it to do, because there's lots of tradable opportunities within it. But right now, the only word I've got for it is boring. It's very much a sideways move. And again, are you seeing anything in terms of breakout, or is it really just that case of don't force anything, sit on your hands? The markets aren't really doing a great deal at the moment.
Yeah, look, since April, we've been going sideways. I don't find that easy to trade at all. I don't think many day traders or even swing traders like it when markets are doing this. It really is just a scalper's market. I'm just blowing up that consolidation pattern since April. And as I said to you earlier, lots of, the candles tend to are starting to indicate the fact that there's a lot of balance in the market and no one really wants to push it. A couple of days ago, we had that doji that I talked about where the market closed near the open. Yesterday, we traded up, we traded down, but closed fairly near the open, a little bit down on the day. I'm just guessing here, and I don't like to guess, but of course we can't do this forever. So eventually we're going to have to break out. Maybe mid-September we'll finally clip one of these trend lines up on, the downward sloping upper trend line or the upward sloping lower trend line. And once they break, hopefully that will give us a move. I thought we had that here around the middle of August, around the end of July, middle to end of July. But that proved to be false. That cost me some money. I went with the break a bit too early and we're down again. So now just a matter of, breaking these trend lines, really.
Yeah, some of those trend lines sounded a lot easier for you to say than for me to say. So I'm glad, I'm glad that you did that.
I confused everybody with those.
No, it makes sense. But I would have definitely got tongue tied. What about, so where's your preference? Dow, S&P probably is more your preference. Are you, that is the market and the Nasdaq to a certain degree that have been hitting those new highs. We saw some announcements from Berkshire Hathaway in the last week or so where some investments that he's made have certainly started to pull the Dow up to the levels that we've seen or back up to record levels and push through those. I'm just, as soon as the Dow goes substantially above that 45,000 level, I'm just selling into the rallies at the moment. I just can't see that they're going to be sustained, and I haven't seen anything myself in the day trading that I do to sustain that. There was one day on that Berkshire Hathaway announcement that I think the futures traded up to about 45,300, but they gave it up fairly quickly as well. So I'm just happy with that process. Nothing scientific or clever about what I do, Jason. You know that. So
It works though, Nick.
Every now and again. But so it's just rinse and repeat. If we go up to 45,250, I'm a seller. Not so keen on buying at these highs. I've got a history of buying record highs. When I look back at the Nikkei 225, and it does make me laugh. The Nikkei 225 is hitting new highs all of the time at the moment as well. So, am I going to rush back in? No. So, go on. So the US indices, or is that the Dow you've got up?
No, I couldn't seem to get the Dow. We'll try that one again in a minute. But that's the S&P. Look, big bull trend. We've had a real good run since that trouble in Q1. And we just keep hitting new highs. There is a trend line here. The trend line seems to be holding it. So maybe we do need another correction. Of course, corrections are healthy in a bull trend. If we do, we could get down in the futures at least to the sort of 63.50, maybe 63.20 area. That's the trend line that I'm looking at there, and the 200-day moving average as well. Sorry, that's a 50-day moving average actually. So nothing significant on the downside, even if we don't get through the trend line, but we're testing it right now. So for example, if we were to close the week above the current all-time high around 65.08, 65.09, that would be a buy signal for me for next week. I talked about dojis, didn't I? There's your two dojis for today on the daily chart. I'll just blow that up. Again, just showing there's a lot of balance in the market now. When you see the long lower wicks and long upper wicks and closes near the open, it's just telling you that there's really not a lot of interest in the market right now. So don't push it. Big positions, not the time to be putting big positions on, I don't think. Nasdaq as well, similar sort of thing. Testing up a trend line, might need a small correction to the downside, but 23,300 probably would be the limit on the downside for the Nasdaq.
Yeah, and it's been spectacular the way that the markets have recovered since the tariff announcement. Nothing short of spectacular, to be honest with you. And we've got the Jackson Hole Symposium at the end of this week, the meeting of the central bankers, economists, and policymakers from around the world. Jerome Powell will be talking. I think it was a year ago that he signaled that pivot with interest rates, and they were going to start reducing them. He's probably underwhelmed over the last year or so in terms of the amount of interest rate reductions there have been. So I think people are kind of waiting to see what he'll say this Friday. I've got a funny feeling he'll disappoint. I don't think he wants to go out in a blaze of glory. His term ends next year. He's very dovish. He's very careful about what he does, and I don't necessarily think there's going to be any positive signs that are going to rush him into an interest rate, apart from the Chinese burn that he's going to get from Donald Trump to try and do that. It will probably be a little bit more aggressive there. He'll get called a few more names. Knucklehead, I think, was the favourite one that I've heard recently in terms of the way that the president refers to the Fed chair. But, you know, that's just their relationship, I suppose. So, look, Jason, it's been fantastic having you on. Everybody sits on their hands. Don't force anything. Forcing trades is probably the worst thing that you can do. And thank you very much for joining us again.
Cheers, Nick. Thank you.
Take care, mate.